This is how the market moves, and I don't see anyone to talk about it. So let's have a chat. To my understanding, and based on my MVM system, which I basically developed and got inspired by the Wyckoff and auction market theory, is the price moving from one liquidity to another. In other words, in a really simple term, the price moving from the point A, which is a key level on the high time frame, and moving basically to the point B. So moving from point A to the point B. And on the way, there's gonna be a plenty internal levels that wants to be basically taken out prior to the significant key high time frame levels. On a key high time frame level, there always will be a certain manipulation. Usually, if you understanding the Wyckoff, there's gonna be some schematic, usually 2 to 3 drives to the upside or the downside, depending on the direction. That might gonna be a little bit too complex. So I just want to simplify a really simple way. Usually what I want to see here, I want to see some pushes to the downside, manipulation on that level, and basically seeing the volume that telling me and confirming that we no longer are interested in this level and we want to move to another level. Then usually you're gonna see some sort of pullback. It's either gonna be another manipulation or just some slight consolidation and pushing price to the upside, another momentum if you will. Then usually the price gonna stop at a certain level, which also gonna be some significant level usually, but it's not gonna be the main basically key level that the price wants to reach to. These levels, there always will be a certain distribution, which always gonna be in certain drives to the upside with the manipulation and momentum to the downside again. And that's gonna basically continue all the way up, which also on the way up, we want to see certain highs and the lows to be taken out. So there's gonna be as much damage as possible in the market, and a lot of people gonna be stopped out because of it. As you can see here, there is a significant level right here on the way up. We're gonna take that high. On that level, there always will be another certain basically pattern and manipulation pushing price away. If we're gonna take another level that basically caused this level, we either gonna consolidate before that level or we gonna break it, and there always gonna be another certain reaccumulation, consolidation if you will, until we reach a significant level. On that significant level, we're gonna have usually another distribution or reaccumulation and pushing either price higher if there's gonna be another more significant level, or we're gonna repeat the process over again. So now let's have a look on the real example. I was trading the gold around these levels, so let's actually have a look on it. As you can see here, we having a large accumulation, and this is a really large consolidation for multiple days. At this point, it's really not important what it is. All you have to just see is highs and the lows, and we basically trading the most of the volume basically right around these levels until we break that range. This will be definitely some significant area to looking for initial reaction in the future. What we have later on, after we breaking after that high, we having some pushes to the downside. So we having 3 pushes to the downside following by another momentum to the upside. As you can see here, this is a significant manipulation. We didn't spend that much time here and pushing price away. So this eventually will be a really significant level in the future. So looking for initial reaction, and if the price decides to be bearish, we want to see break of this low. Then we eventually continue to the upside. We leaving some significant imbalance right here, and we having another basically, let's say, continuation, but it also having some range in it. So eventually we could mark this as another reaccumulation. Moving on, then we pushing price higher again. As you can see here, we having 3 pushes followed by after this moving price to the downside. Where we're gonna react to? Back to this larger accumulation. On here, we basically having just some reaction, but this zone eventually is quite a bit significant. Unlike this zone, this is just some continuation to the upside. So this zone is not as important compared to this one, because this did eventually something more significant in the market. And as you can see here, eventually after a really large range, we breaking to the downside to basically take out all these lows right here. So as you can see here, we have a plenty lows to be taken out, but if you're paying attention to, we actually haven't take out this significant low, and there is the imbalance in the market. If we're not gonna reach this level, I can highlight this level for the further price action, because the price very likely gonna reach that level in the future. Now what we can see after we taking these two significant levels, we having another manipulation. So it's not as significant, but as you can see here, we having some multiple lows right here, followed by major manipulation, and then the price moving and basically closes above all these levels right here. That itself is a really good sign, and I would be 100% looking for the entry, which eventually this is the level area I was looking, and I executed some long trade. And basically we having confirmed accumulation at this point, and we will very likely gonna follow and aiming for another basically liquidity, which is all these highs right here. After we taking two levels right here, we again having another pushes to the upside. We having some establishment in form of a small range, but also as you can see here, we haven't take out these lows, these highs and this significant high right here. What we can see is we can see manipulation on the lows first, and after we having that manipulation on the lows, we start to seeing the momentum to the upside. So eventually this entire zone became my reaccumulation again and aiming for these highs. And this is how the literally market moves on any kind of time frame. The logic is really simple, and basically it repeats and rhymes over and over, because what we can see on a higher time frame after we taking out this significant high, we having some large distribution, which you can see 3 significant pushes to the upside. If we're gonna zoom this, there's gonna be again the same principle. There's gonna be some pushes to the upside followed by shift, basically confirming that we want to see lower prices. Where the price gonna go? Well, it very likely gonna have a reaction here, because this was a significant area. But if we are bearish, eventually these lows gonna serve as a liquidity level, and pretty much the same right here, because we also having this significant imbalance right here. And moving here, there's also gonna be some reaction to this level, but also we actually having some imbalance in the market right here as well. And moving to the larger play right here, as you can see, we slice through right here. This accumulation gave us some reaction. We break through after we reaching this imbalance right here. We having another basically distribution right here, and we pushing price down to another imbalance in the market. At the same time, we having a significant loss to be taken out right here. And what do you see here? Obviously, we having some pushes to the downside followed by manipulation and momentum. And like I said, this basically repeats and rhymes over and over again. And I truly believe if you understand how the market moves, this will be a game-changing information.